Intel just made a huge move today, up over 20% on the announcement that they are working with one of their arch rivals, NVIDIA, and AMD. AMD struggling. AMD is the redheaded stepchild in this case. AMD is getting kicked and beaten with a broom while NVIDIA is rocketing higher today. So the news on Intel will develop with NVIDIA custom x86 CPUs for integration into NVIDIA's AI infrastructure platform and create chip systems for NVIDIA chiplets used in their PCs. Intel partners with NVIDIA in a $5 billion deal, likely increasing demand for the ASML's lithography. And Intel's up over 23% right now. A couple news stories coming out on the NVIDIA side. Intel invested $5 billion in Intel, buying shares at $23 each. Currently, the price is at $30 each. And China has begun an antitrust probe into NVIDIA, alleging violations of anti-monopoly law. This follows NVIDIA's licensing of H20 chips to China, amid rising domestic production pressures. And then AMD, like the redheaded stepchild loser of the group, right, in a awful, terrible, no good, very bad, bearish trend, AMD shares fell 3% earlier today. They've recovered pretty well, but everybody hates AMD. Everybody loves some NVIDIA and Intel together. What do you think of this, Joe?
I think with Intel breaking through that order block, it's a good sign, but is it going to be a gap and go or a gap and crap? We're going to have to see.
Joe, what do you mean by gap and crap? Could you please explain that to a guy with an itty bitty baby brain like myself?
Well, a gap and go would be a large white block underneath your candle that doesn't get filled in color the next day. So
yeah.
a gap and crap, then if the price drops again tomorrow, the price is falling, then you're in gap and crap territory. So it might be a little early to invest in it right now, and unless you have some sort of conviction or your plan tells you to, you kind of need to look and see, is this going to keep going tomorrow or not?
Yeah, I don't know. And that's the thing, is that we don't have to know, right? Mm-hmm. If we are going to take a risk on Intel right here, here's where Chris would be putting his stops. First, anytime that we see a gap like this greater than 5%, right? We need to caveat this. We've run the data, and a 5% gap is where we need to be looking and using what's called a gap and crap versus gap and go. I would put a stop at the bottom of this candle right here, or at least a line. And if in the next 3 days, if it continues higher, that could be the very beginning of a big, beautiful, lovely, wonderful money-making trend. However, if within 3 days it closes under that line, that is a big red flag, a big, giant, do not even touch it type of red flag with a gap and crap. So, you know what? Nico, he says that candle doesn't look so good. No. And he's going to go short it tomorrow. By all means, dude, you do you. Just know where your risk is at. So let's take a look at these three stocks up on the board real quick. And before we do that, let's go look at the market. So we still have buy signals on the Qs, the Dow Jones, the SPY. Everything's looking solid over there. Market breadth, however, not looking so hot still. More and more sell signals coming through. In fact, just today, 53 new sell signals versus 49 new buy signals. By the way, we cover roughly 2,600 stocks. By October 9th or 10th, Joe, I don't know if you heard the news, we're going to be adding 2,000 more stocks with the buy and sell signals. 2,000 more. So we're nearly doubling the size of all the stocks that are covered inside of OVTLYR. It's going to do all kinds of great things for you in your portfolio. I'm very excited about that.
I am too. That means a heck of a lot more signals coming from OVTLYR. This has opportunity written all over it.
Oh yeah, for sure. And it will impact market breadth, right? Because now we're going to have more buy and sell signals flying through here. It will impact market breadth, but that's okay. The more data, the more better, in my opinion. So I'm good for that. But let's take a look first at the SPY. We got the buy signal on the SPY. And we're going to talk more about those buy signals in a little bit with what I like to call, don't tell anybody, like this is between you and me, Joe, and everybody watching live and everybody who's going to watch the replay. Plan ETF.
Oh,
Plan ETF. It's coming. It's real. It's unbelievable. Plan ETF. Right. Yeah. So anyways, we got a buy signal right here. The market's trending higher. S&P, fear and greed, it came down for a moment, Joe. I know you got excited about that, but it's already back over 70. It's at 7104, right? Just can't hold it down.
Yeah, I was excited about that. I saw it ticking down for a few days in a row there, and unfortunately, it was going the wrong direction, down, right? We want it to go up, but now it's over 70 and going up. So the signals just aren't lining up for me.
Exactly. We want it going up, and we want it going up to 70. Once it crosses over 70, it's a market that has become far too greedy overall. And you might have made a ton of money. I want to put this out there. You can be making tons of money in this market, and that's okay. I would suggest you just create a plan and follow that plan, right? You do you, my friends. You do you. For me, it's too much risk in this market right now to be trading anything, especially with breadth going down the way it is. And plan A, plan M, and plan ETF, you want to be seeing some outlier 9 coming through here. Actually, plan ETF, you don't even need that. You don't even need it for plan ETF. I'm just saying.
Oh, teaser.
Oh, big teaser, big teaser. Let's go to Intel first. So Intel still sitting on the sell signal because it did not know about the big move coming through right here. And that's okay, right? It's still, oh man, these big order blocks have been sitting there for how long have these been sitting there? For at least 200 days they've been sitting here, right? Tell me order blocks don't work. Every time it's come up into this area, it has been rejected. And finally, it had the catalyst it needed to push on up through there. So that's great, actually. Support turns into resistance. Resistance turns into support. We could see some great support coming through Intel right here. So I wouldn't be surprised at all if we saw this flip over into a buy signal tomorrow. Just, of course, be ready to watch for all 9 of Outlier 9 lit up on there. Then going over to NVIDIA. NVIDIA up today as well, 3.62%, but it doesn't quite have that 10-20-50 just yet. It's still technically in a sideways trend, Joe. Price is over the 50, but the 10 is under the 20. And because of that, it's still a sideways trend. And that's why it has a white background right here. Now, it looks like Outlier is even plotting a Outlier block right on top of it that TradingView has yet to do. So it might have some overhead resistance that hasn't materialized right here just yet. And the last of the 3, AMD, the big loser of the bunch, right? They got left out in the cold, right? They had to walk to school uphill both ways in the snow, and then somebody punched them in the gut and stole their lunch money. Man, AMD just can't catch a break here, but it did catch a sell signal a while back, and AMD has just been faltering, going sideways. But AMD was a rocket ship for months. AMD just up and up and up and up, and you can see that buy signal came on May 5th, wasn't touched at all until August. I just took profit on Intel because of Chris, because you taught me the power of rolling. The power of rolling. Oh my gosh. Yes. Are you kidding? How you can keep the trade alive, take partial profits today, free up capital for something else, and it allows you to do stuff you can't do with with stock at all. It is absolutely, for sure, a ninja hack. One of those free ninja hacks for being part of Outlier. So, Joe, we looked at those 3 stocks. I'm not going to be trading anything today. And if you don't, if you're okay with that, maybe I could explain why in plan A and plan M that I wouldn't be trading anything today. Are you interested in hearing about that? Oh, you're muted, my friend. How dare you?
I am so interested in seeing these plans, man. I'm salivating over here. Bring it.
All right, Joe. Listen, there will be times to put all available cash to work. But let's ask ourselves this question. When do we want to use each of our plans? When do we want to use each of our plans? Well, first off, we have 4 plans. We have 4 different plans that we can execute at any time. First plan sit in cash and don't F up. It's going to be the most common plan. It will still continue to be the most common plan. When literally nothing else is set up, what do? You hold cash. And you hold cash for how long? As long as it takes. As long as it takes. So plan sit in cash and don't F up. We'll talk about that in a moment. Plan ETF will most likely be the second most common plan. And that is when we have some setups going on. You've got some extra cash, but we're not fully invested. Rather than sitting in cash and not effing up, you can sit in plan ETF and earn significantly more thanks to an amazing work by Scott, our quant. He figured out something so simple, so elegant, and so profitable all at the same time. Ooh, Next, plan M. This is the moneymaker. Plan M for moneyness. Plan M for money making. This is our most profitable plan, and it's not even close. Here's the cool thing, Joe. Scott ran data for me because Scott is the best. Oh my gosh, I'm so blessed that Scott's in our lives. Scott's in all of our lives. We can take setups that are up to 5 days old.
Wow, that's fantastic. Woohoo. Wow, that's especially great considering the DCs just don't line up very frequently. So 5 days, that gives you a lot more wiggle room.
Dude, it is so cool. So cool. We can take setups not just today, but tomorrow, the day after, even 5 I need to get Scott to confirm 5 calendar days or 5 trading days. Actually, I would like Scott to confirm that if you don't mind. I'll drop that into the chat. Because this is a big deal. We're calling these second chance signals. If you don't get it today, that's fine. You could get it tomorrow. And this is one thing I was thinking about too, Joe. Let's say you're in one of these and let's say you get stopped out. Hey, guess what? That one from 3 days ago, it's lit up now. You've got cash. You could just go get that one now.
Mm-hmm.
How cool is that?
Yeah.
5 trading days. Thank you very much. 5 trading days old. Scott, thank you very much. And we want to take as many of these as possible, right? When we are lit up, we want to be getting into these as much as we can. However, here's a big caveat. Position sizing is a lot smaller, because our stop on these is huge.
Mm-hmm.
We're talking position sizes roughly a quarter of what we were doing before.
Oh, okay.
But you know what that means, Joe? More trades.
More of them. Yeah.
More trades. More trades, even up to 5 calendar days ago, or 5 trading days ago.
Mm-hmm.
Not so bad, huh?
Yeah, especially since I think the last time I saw Plan A, there was less exit signals. So maybe able to handle those 10, 11, or 12 trades.
Maybe so. And then Plan A is if you don't have anything set up for Plan M, even up to 5 days ago, and you're not set up for Plan ETF, and you're certainly not ready to sit out in cash, Plan A, it's there. It has incredible profitability. But if I have any cash that I need to invest, I'm going for Plan M. So let's talk about Plan A. So Plan A and Plan M have nearly identical starting points over here. I'm going to drop off the chat just so everybody can see everything. Bye, guys. See you later. Have a great day. So what we need to see, and let me preface this and say, the content will not be changing, but the structure of it might. Okay. So if you see this again later on, it will be identical to what it is today, but it might look different. The wrapper might be different. It's still going to be a Snickers on the inside, but it has a new wrapper on the outside. Okay. So first, the SPY needs to be trending higher. We need to have a bullish trend for the market. We need to have a buy signal for the market. And we need the full stocks breadth to be crossed over the 10 EMA. This is unchanged from Outlier 9. Unchanged from Outlier 9.
That's what I was thinking. It's the exact thing we've been following for months. Yeah.
Exactly. Mm-hmm. Small little addition here. Doesn't change Outlier 9. Is that the SPY fear and greed needs to be under 70 and rising. We talked about that just a few minutes ago.
Mm-hmm.
That's it. Right. And if you don't have this, don't go on to the next step. Okay. If you don't have the market set up, you don't go on to the next step. If you go on the next step, it's only because the market's set up. And then you want to see the sector fear and greed heat map, the same heat map as if we're looking at the SPY, under 70 and rising. So let's take a look at one of those. Let's go to AMD. This is the sector heat map right here. This is the sector heat map. This is the average fear and greed score for everything in that sector. We want to see that under 70 and rising. We also want to see sector breadth crossed over, the bullish crossover on the 10 EMA. The same thing as this breadth here, but instead of doing full stocks, you do the sector. So in this case, that would be the tech sector. Now, that's still these two right here. Little additional things to go onto it. Sector relative greed. This is measuring how greedy the sector is compared to how greedy the SPY is, the market is. Now, We are making enhancements to the breadth page. By the way, Joe, I don't think you've heard this yet. Backlav created an amazing bookmarklet, and I sent it over to Mahesh, and I said, Mahesh, we need to make it look like this, because what he's done is so simple, so clean. It has everything that I need to see all in one spot. Can we do this here? And Mahesh's like, I got you. So part of that October 9th and 10th upgrade will be moving something very similar to this. It's not going to be identical, obviously, but something very similar to this to our market breadth page to make life a lot easier. So you can very quickly see what's the relative greed. Do we have any sectors that are more greedy than the SPY? Do we have the sector breadths crossed over? Look at this, right? The heat map. The SPY's heat map is 71. Are any of these higher than 71? No. Boom, just like that.
Very quick, very easy.
Super easy. Let's say, for example, we were talking about the tech stocks. Let's say that the tech stocks were over 7104. It could be 7105. All we need is it higher. It needs to be under 70. I should preface this and say we need the SPY under 70 and the sector under 70, both. But if it's over whatever the SPY is, that's what we're looking for. And moving up. And the breadth must also be crossed over. So we could look at something like this, where we've got the breadth crossover showing right here. We've got the fear and greed heat map showing right here. Makes it so easy. And then AS1 and AS2. Scott had a really smart refinement to this about 15 minutes ago that I've added. And it's if the AS1 is if the market's equal to 1 and the sector is greater than or equal to 1. So AS1 is when the market is equal to 1 and the sector is greater than or equal to 1. Let's go look at this today. What's the Docu channels today? The Docu channels today looks like -2. We're moving down. We're getting more downtrends, less uptrends. That's no bueno. You don't want to be trading that. You want to be trading when we're having more uptrends, less downtrends. Okay. So the score is based on the market plus the sector. AS1 is a market equals 1 and greater than 1 on the sector. Greater than equal to 1 on the sector. AS2, market equals 2, sector is anything. Scott was like, just take off the sector equals anything. If it's market equals 1, it's going to be AS1. If it's market equals 2, it's going to be AS2. I was like, okay, cool. That makes it nice. I like it.
Yep.
So when your market's set up, when you find a sector that's set up, only at that point would you work on the active signals. Now, how do you get to active signals? It's super easy. You just come over here and you switch from swing to active. That's it. That's it. Active signals are a lot more frequent. They are still profitable, but they are more frequent. You're going to be ins and outs instead of just buys and holds for a while and then get outs. So that's the only switch right here. It still needs to be in an uptrend, still needs a buy signal. The fear and greed on the heat map needs to be rising, and it needs to be at least 2% away from an order block of any age at entry. I want to preface this and say at any age from entry. Scott had to correct me the other day. So if you're looking at a chart, let's go to AMD. And you are, let me remove my notes on here real quick. And let's say, for example, you got a buy signal right here. It is really close to an order block, even though it's a baby one. You know, it's only a few days old. We don't want that one. Okay, we're going to skip that trade. However, if you're already in it and it runs up to this order block here, that's not an exit signal. The exit signal order blocks, which we'll talk about exits in a minute, need to be at least 125 calendar days old. So if you're in it already and it runs up to an order block, if it's less than 120 days, you could ignore it. If you're just getting into a trade and there's an order block right there, you don't want to take the trade.
Yeah, we just have to be thinking, you know, what is a person's thinking, right? If they've held this thing for a day, they're probably not itching to sell it. But if they've held it for 120 days, they're probably ready to get rid of it. So that's when the order block is really important.
Yes. So this is still the OVTLYR 9. So we need all 9 of the OVTLYR 9. Right? Our thesis when we first started out here, Joe, was how few of the 9 could we get by with? And if you guys remember, we talked about 137s, 145s, things like that. Those are all 137, 145s thrown out the window. It is all 9. If you want to trade plan M, if you want to trade plan A, you need all 9. And that's okay, because you're not going to get this all the time. That's why we have Plan ETF, and that's why we have Plan Sit and Cash and Don't F Up. We're
Mhm.
here for you to make sure you have a well-rounded portfolio every day of the year. Every day
Awesome.
of the year.
Well, thank you. And, we have SGov, so it's not like we're not making money when we're sitting in cash.
That's right. That's right. Now, the ones that have a slight bluish hue to them are not in Outlier 9, but they are necessary. So, like I say, the content is not going to change, but the wrapper that I wrap this in might change in a bit. Still working on how it's going to look. I would love inputs, by the way. If in the Discord you could share some inputs on what you think that this could look like. I am not a designer at all. I have Rudes to do that. She is amazing. By the way, I had to talk Rudes off a cliff this morning. I was like, no, 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 no. You're not doing that. No, you're not going anywhere. You're staying right here forever. Rudes has been with me for 5 years. But she's like, I can't do this anymore. And I'm like, yes, you can. You're not
Oh,
allowed to
no.
go.
She's doing a great job.
She's doing an amazing job.
Yeah.
It just happens every once in a while, right? Like, I'm tired of this. I'm sure you felt that way, Joe. Wink, wink, nudge, nudge. So you want to make sure the price is still over the 10 EMA. The price is greater than $10. Now, this is for options availability. You can take whatever trade you want. I used to be a snob. I'm a reform snob. I'm still Batman, but I'm a reform snob. And I want to see the price over $10 because of options availability. Once they get under $5, once they get under $10, there's not a lot of options to choose from anyway. And then we want to see there's going to be potentially hundreds of trades that come through on these days. How do we rank those, Joe? We're not going to take all hundreds of those. The top 10 is what I've been working with, what I've been backtesting. And granted, that's the part of luck that comes into the plan. I don't want to say that there's any luck, but if there's 100 stocks to choose from and 95 of them have positive expectancy, you can't trade all 95. You're going to have to sort it in some way. Maybe you sort it by alphabetically. Maybe you sort it by your most favorite to least favorite company. The way that I'm going to sort it is ranked by the outlier signal return as of that date. So could be a thing, could be a thing. And then healthcare is off the board, Joe. We're never trading that dude again. Screw that guy. He's out of here. It's so funny because when you drop off healthcare, everything gets better. All the expectancies get better across the board. Screw that dude. I am done.
Awesome.
You could even sort it randomly. Exactly.
I don't see a mention of open interest. Do we have a sense of that? Or are we going with the 4 to 6 times your entry?
Okay. So this is all stock related. Haven't even touched options.
Okay.
That plan won't change. That plan won't change.
Gotcha.
Yep. So that's all plan A. Now let's talk about the exit signals. There's a lot less of them. A lot less of them. It's a lot simpler. You get a sell signal in outlier. It closes under the 10 EMA. It hits an order block that's at least 120 days old. If you have earnings or if you have gap and craps, which we talked about earlier, what that is. It may seem like a lot, but that's 5 total exit signals. You just have 3 pages worth of exit signals. Now, one other note. If we rack up 3 losers in a single day, that is the market telling us things are broken. Do not put on new trades. Now, we've talked about this before, and this is something that Mark Minervini taught me, is when you are running cold, don't get bold. That's his little thing. Basically, he's saying that if you are having a losing streak, that is the market telling you your strategy isn't working anymore. You need to take a break. And that's okay. That happens, right? Every strategy has a window. I love the 5 exit signals only. Yeah. Every strategy has a window where it works best. And when you have 3 losers that you've worked in a single day, that's the market telling you need to listen. Stop putting on new trades. And the best part about this, Joe, I couldn't believe this when I found it, was that it literally kept you out. Like, let's say that there's windows of trades that let's say, for example, there's 20 trades or 20 days a year where you can trade plan A. Okay. Let's just say, for example, when this happens, it would get you out on the 19th day. So then on the 20th day, you're not even in the market when your trades have already stopped working and started to turn around. Like, I saw it. I saw the pattern over and over and over. And I'm like, this is so cool. It gets us to have less losers because it's identified the trades aren't working anymore. Stop trading. And then boom, less losers. How cool is that?
Awesome. Fantastic.
But if you're in the trades already, go ahead and let them run. Let them run their course. Let them do their thing. It doesn't mean you need to close everything. It just means no new trades for at least a week.
Okay.
Now,
so these are our exit signals. So we might want to rename where it says sell active signals. We might want to say something about exit or close, or
yes,
because we don't want to accidentally get into selling options. We've learned our lessons there.
No, certainly not. And none of this is short selling. None of this is going short the market. Everything that we've built is all going long. So don't worry about that. Okay. So position sizing for plan A. This is a big deal, right? It's great to have ideas, but how do you position size for this? So the position sizing needs to be based on the greater of whichever of the two has more risk, either the half ATR or the distance to the 10 EMA. Now, I know that sounds complicated, but how about if I automate that for you, Joe? How about if you're like, man, that sounds too hard. What's Chris going to do? Chris already took care of that. Chris done did do it for you.
Well, thank you.
So this is a new position sizing tool. Deep Thought has access to it right now. He's the only one in the whole world that has access, not even Scott. And he is validating that I got all the numbers correct. I got all the formulas correct. Once he's approved it, we'll upload it in the Discord so everybody can have access to it. And this and our portfolio manager is slated to be built into the OVTLYR platform by the end of the year. I don't like the idea of relying on Google Sheets when we can just work in the OVTLYR platform. So how about, thanks, Mikey, Mike the Market Maker. You're pretty amazing too. Let's say that we have all these trade ideas that we want to put on, okay? And let's say that we want to use the 80 delta. Well, Joe, right off the bat, if you're planning trade A or plan M, it just shows you right there how many shares you want to take. Pretty cool. If you don't want to be bothered with options, don't worry about it. It's all right there. But let's say, you know what, Joe? I love trading options because of the capital efficiency that we can get from those. Just use the expand button. It'll tell you the option size. It'll show you how much risk per share. It'll show you how much stock risk that you're looking to put on based on the size. You can add in the price of the contract that you're looking to trade. And then it'll show you how much better leverage you're going to get, because rather than taking 55% of your portfolio, if this was a $5 option, it was just a example that I put in, it'd only be 2% of your portfolio. Pretty cool, right?
Fantastic.
Now we've talked about plan A, but let's say you're like, you know what? I don't want to trade plan A. It's using the risk of half an ATR or the distance to the 10 EMA. And this was actually really enlightening. One that I found, if you used 100,000 and 5% risk per trade, in the current setup right here, that would be 5 contracts on the QQQ. And on the old position sizer, let me pull this over here. On the old position sizer, it's 5 contracts. Hang on. I thought it was down to 1 contract. Hang on. I totally stole my own thunder right there. I was looking at this earlier, and it was significantly less position size because it was so much further away. Maybe it wasn't QQs. Maybe it was something else. But anyway, it was significantly less position size because it's so far away from the 10 EMA. And I was like, whoa, that's a little way to help you not over leverage into anything. I was like, wow, that's pretty cool, because the 10 EMA is our stop out point.
Okay.
Now, let's talk about plan M. Plan M is exactly the same on the entries, except for swing signals. That's it. So it's easy to remember. Plan A, plan M. You just switch from one to the other. Exits, swing signals or active signals. Too easy. Daniel, this is what makes OVTLYR not just signals, but it covers all aspects of what a retail trader needs to operate. Yes, exactly. This is what it's like to develop a trading plan versus just buy and sell signals. Big difference. This is what separates the best from the rest. Okay. So everything is the same except for changing to swing signals. However, the difference here is a 2 ATR stop. It's huge. It is a monster distance. Because of that, you want to trade smaller. Now, why? We have found the volatility before the big move can sometimes close under the 10. It can sometimes close under the 20, and it can sometimes close under the 50. And trust me, Joe, that hurts. That hurts me because I'm like, man, I'm breaking some cardinal rules right here in trading. But we're going to make sure that we have a stop. We do have a stop, just like the turtle traders did, a 2 ATR stop. Now, what are the exits? A sell signal, a 10-20 bearish cross, any order blocks, any earnings, and any gap and craps. Should look really familiar to plan A. Like if we do the two of them next to each other, it's really similar. And I like that because we want consistency. I don't want you to have to like reinvent the wheel to go from plan A to plan M, right? Plan A, plan M on the entry side, it's just a change of signals. On the exit side, we're taking a little bit more risk in this case as far as the volatility goes, but we're making up that risk by sizing down. So it makes it up.
Yeah, we're giving the price a little more wiggle room. Like to have a 10-20 cross, you could have a few days in a row where the price is going sideways or trending down before you're going to get that signal. So just like you said, you need to have a smaller position size.
Yes, exactly. But Joe, I got that taken care of for you. Right here, plan M.
All right.
Plan M, all buttoned up nice and sweet, right? So for the Qs, you'd go from 400. Oh, here's where I found it on the one. Okay. So the old position sizer would have had you at 5 contracts. When you use plan M, it's down to 1 contract on Qs. Like it's significantly smaller sizes, because of the distance of holding it. Okay. Now listen, you're probably like, well, I don't want to trade significantly smaller sizes. The dollar risk is the same as it always has been, which is 1/4 of our max risk. Our max risk is if all shit goes sideways, and we've had it happen. If all shit goes sideways, that's the most we want to lose. But in a normal exit, we want to risk 1/4 of that. Okay. Now, you're going to find people out there who say, I never take a trade that's more than 1%, 2% of my position size. That's this. That is this. That is intentionally built this way. 1/4 of our absolute maximum risk. Okay. That I did this on purpose. And it does everything that the plan A does as far as the sizing, right? It'll show you the share size. It'll show you the option size. And you can see the price per contract that you want to add into it, and it'll give you option portfolio size. Now, a couple things to keep in mind. Like, for example, Apple, using plan A, the risk to stop, the distance to the stop, is $2.31. The distance to the stop on plan M is $8.75. That's why you would trade 143 share size versus a 572 share size. That's why you would trade 1 contract versus 7. Now, listen, I understand that this is significantly less contracts, so less dollars to a lot of people. But if you can see, and I don't know how much data I can show, but the percentage returns on plan M absolutely decimate the percentage returns and win rate of plan A. It is by design trying to keep you at less risk. Now, like I said earlier, if you're a big baller like Joe and you have multiple accounts, man, what are you going to do? What are you going to do? It's so much work to have to do all these calculations, right? I just want to see option size right there. And then how about this? How about I built it for you where now you can have up to 3 different extra accounts. So you can see the option size right there for account 1, account 2, account 3, and account 4. How cool is that?
This is fantastic. Well done.
Oh, thanks, man. But it gets better.
Better yet.
Let's say that you like plan M rather than plan A. You're like, I don't want to trade plan A. That's so dumb. I only want to trade plan M. I agree with you. There's account 1. There's account 2, 3, and 4. So now it has all of the calculations done for you automatically.
This
Isn't that cool?
Well
Dude,
done.
I'm very excited about this. So, like I say, this will all be built into OVTLYR at some point, hopefully before year end. but we're trying to make this where it's as turnkey as possible. You know where you're going to get in, where you're going to get out, how big you're going to get in with, and how to trade it with multiple accounts. Okay. Now, but wait, there's more.
Yeah, there's more than that. Are you going to tell us what the red highlighting is?
Red highlighting is stay out.
Yeah.
This was a deep thought suggestion, and I thought it was brilliant. If it's under the 10 EMA, it's not even going to calculate position sizes for you. It's literally going to be like, no, this is a bad idea. Don't do it. Pretty
deep
cool,
thought,
right?
well done, sir.
Yeah, it's not even going to let you do it. I thought that was really brilliant. So we talked about position sizing for plan M. How about plan ETF? You excited about plan ETF? Boy, I tell you what, I'm excited about plan ETF.
I am. What do we got?
How about plan ETF? Now, this is what's going to change most as far as like how it looks, but we're really focusing in on two ETFs, Qs and SPY, mostly Qs, because Scott has found a really, really sick hack. You want the Qs to be in a buy signal at any point in time. 20 days later, whatever later, you just want it to be in a buy signal. Now, one trade that Scott found, it went for 97 days. And on nearly 97 of those days, did it print money. Like, this is one where you can actually just sit in for a while. Honestly, if we had plan ETF right now, we would be in this and not in plan sit and cash and don't F up. And the market's doing really well.
Mm-hmm.
So we would be taking advantage of plan ETF right now. First, you want to get a buy signal when the Q heat map is under 70. So let's go take a look at when that happened. By the way, you guys enjoying this? Is this useful? Scott says the longest was 105 days. 105 days, just sitting there collecting money.
Wow.
Daniel's like, oh man, I love the multiple account setup. Yeah, it's actually Joe's idea. That dude Joe right there gave me the idea, and I basically copied his template. He did great. So Qs on the swing signals, Friday, September 5th, it was at 63.32. We would be in this right now, according to plan ETF, because it does not matter if the heat map is moving up or down, just that it's under 70. So I'm telling you with a fact, this would have been initiated on this date. Plan ETF right there. Isn't this fun to have like a whole plan, like all year round plan? I really love this. This is a huge improvement for what we were doing before.
This is awesome. And you can tell in Discord that folks don't like to sit on their hands. So they're going to have many more opportunities to trade.
Dude, trades that are up to 5 days past the buy signal. Trades where you can buy this at any time that the Q buy signal's in place and it's under 70. I'm telling you right now, it's the Qs right now. Yeah. But Scott made a brilliant observation. This is not one. This is still a defensive plan. Sit and cash and don't F up, and plan ETF are defensive plans. And because of that, we don't want to trade options on these. There are times to be aggressive. There are times to be defensive. This is when you use one of those times to be defensive. And so we would be buying shares, but not just shares of Qs, shares of TQs, shares of triple leverage Qs.
Oh, okay.
Now, I was not a huge fan of triple leverage ETFs. Scott's turned me over. He has turned me over because some of these returns were like 56%
on an ETF
on the triple Qs, and the worst drawdown was like 7% or something like that. Like the expectancy was so much higher than just Qs outright, even with the stigma of the daily nightly rebalancing. Going with T triple Q made so much more financial sense, but with shares and not options, because we don't want they to work against us, right? We're going to be holding these for potentially months.
Mm-hmm.
So we don't want to deal with it. And we could take it at any point in time that these things are happening. Okay. So we can't take it today because the Qs are at, well, actually we could 65. Actually, we totally could 65.09. I totally missed that. I thought it was over 70. So in theory, you could take the plan ETF like right now today. It doesn't guarantee that you're going to be profitable. Let's keep that in mind. There are still wins and there are still losses in this. Okay. But the expectancy is huge. The expectancy is tremendous, and it gives you something to do when there's nothing else to do.
And since they're ETFs, you can trade in and out of them during the day. You don't have to wait till the end of the day.
True. Very true. Now you could still get yourself into a wash sale. So that is a thing that you would have to work around if you care about that. That's a tax thing. I don't care. Don't get me to explain it. It's just annoying, but it can happen. The same thing can be true and work with the SPY when it's under 70, which it's not right now. I thought Qs were as well, but when it's under 70, and it does not matter if the heat map is moving up or down, and it has a buy signal, and you could use SPXL, another leverage ETF, not options. Isn't that cool, man? I'm so stoked about that. Now, what about the exits? Where do you get out? Well, number one, if you need cash to trade, you get out using that. Or you get a sell signal or the 1020 bearish cross on the Qs or on the SPY. That's it. Those are the only two exit signals.
That's easy.
That's so easy. And you can run these for months at a time.
Yeah. When was the last 1020 cross on SPY?
I don't know. Ages ago.
Like May or something?
Like way back when. Yeah.
Yeah.
So this is so sick. This is so sick, and I am so excited about it. But here's the other thing, right? Once everything else is exhausted, we still have plans sitting cash and don't F up, right? And then you take all your available cash and you throw it into SGov. When no other plans fit, you just buy SGov and wait. But we do want to roll over. Now, rolling over SGov, you would sell all of your SGov holdings on the last calendar trading day of the month. So, for example, if the 31st is on a Sunday and the last trading calendar day is that Friday, you want to sell everything on that Friday. Okay. And then on Monday, when it's the first, repurchase whatever you need to on the first calendar trading day of that month. And by doing this, it 100% eliminates any sort of rebalancing that can happen with SGov. And I know if you look at a chart, it looks like nothing ever happens. Zoom out and you will see a giant move up, a huge move up. That also means there could be a giant, huge move down. You can avoid that. You can avoid that. It eliminates any potential market risk and gets you to the cash faster than waiting 5 to 7 days for the dividend. So let's talk about SGov real quick. So SGov, which is exactly where my cash is parked right now, goes up on a daily basis. This is the 0 to 3 month Treasury bond ETF. And it is a brilliant, easy place to put your cash. And I didn't even know about this until May. I'm really frustrated. I didn't know about it until May. And it pays over 4% right now. And you can see every month it ticks up, it ticks up, it ticks up, and then crashes down. And you're probably thinking, well, this is a terrible thing. Not if you buy it on the bottom and you sell it on the way up and you repeat every month, okay? It's the interest essentially that you're earning throughout the month being paid, deposited into your account daily. You're getting your daily interest. And then at the end of the month, what it does is it deposits into your account the dividend. The dividend is equivalent to how much it went up during the month. So all we're doing is sidestepping the dividend, which comes 3 to 5 to 7 days later. And Joe, you know what's crazy? Is that if you buy it here before you get the dividend 3 to 5 to 7 days later, you can actually buy more of them because you don't have to wait 3 to 5 to 7 days as it's already moved up.
Genius.
So you can buy more SGov right away. I didn't come up with that. That was Dave. I thought it was smart. Super, super smart. So I'm really excited. We have 4 unbelievably solid plans that we have been working tirelessly for months on. Scott hasn't slept. Like Smahesh has not allowed him to sleep since the moment he started with us. Scott has been absolutely ruined. He's going to go back to uni and be like, wow, this is so much easier than working for those guys at OVTLYR. But man, it couldn't have come at a better time. We just came off the back of 2 losing streaks, which really prompted us to say, where can we make improvements? Scott showed up at the right time. VacLav helped us out over in the Discord. And all of you guys have been there the whole way as we have shown you step by step and been as transparent as possible. Scott is so tired. Been as transparent as possible about this whole thing. And where we were a couple months ago to where we are today is not even in the same zip code, area code, state, nation, or continent from where we were. It is so much more advanced. And this is why you use all the data to come up with a plan that works for you 365 days a year and allows you to find Masters of the Universe kind of money. Dude, Joe, I'm so stoked about this. I don't know if you know this, but this is going to go out on YouTube and people are going to watch this for free. And we're not going to charge people $10,000 for access to this. A quarter. No. If they decide to get into it, that's up to them. We're not going to force them to do it. But it only costs 82 cents a day. It's probably the greatest deal on the entire planet Earth.
That's amazing. Just subscribe, 82 cents a day, get access to the brilliant minds that we are speaking of today. Incredible. Thank you, Scott.
Thank you, Scott. Thank you, VacLav. Thank you, the whole team. I'll be working on the PowerPoint to make it look more beautiful. But everything is basically written in stone at this point. Is there possible slight changes here and there? Very possible. Scott and I had a clarification this morning that I should point this out. When we were taking a trade that's 5 days later, and this is something I need to confirm with Scott. When you're taking a trade 5 days later, it still needs to be set up. Okay. If you're taking a signal 5 days after the original and you've lost the SPY trend, or you've lost the heat map, or you've lost the stock buy signal, it doesn't exist anymore. You're not allowed to take it. So okay. if the signal came out on Monday and it's Friday and everything that you'd want to see as if you were taking it on Monday is there, that's when you can go for it. But if everything that would have been there on Monday is not there on Friday, you don't take it.
Got it.
Yeah. So Plumber Fred says this is probably worth like 83 cents a day. But at 82, now that is a smoking deal. I agree. So yeah, dude, that's where we're at right now. I'm super stoked. I feel blessed beyond belief to have such an amazing team. And if you don't mind, just smash the like button every now and then. That'd be great. And there's a new button called hype. If you guys see a hype button down there, hype me up, bro. Hype me up, bro. Oh my gosh, last night I intentionally decided to mess with my 13-year-old son Colin, and I pulled up a list of all the brain rot words, and I was like, "What's up, fam? What's up, chat? Was your day lit? Man, this is straight fire. Hey, listen, I need you to go fold some laundry. That would be that would slap." And I just went crazy, and he looked at me and he's like, I hate this guy so much.
Oh, dad jokes.
Dude, I have so much fun with that. And like having a teenager, like there's some days where it's the most fun in the world, and there's some days where it's like, oh, I hate every moment of this. Yeah, but it definitely keeps me on your toes.
Yeah. They're so fun to watch though.
Yep. Dark O'Clock knows his kids hate it when he does that, and Charlotte's like, yeah, dad jokes are the best. I get it. That is dope. No, that's too close to a drug reference. I won't say that, but we'll do it here for now. That is dope. It is so much fun having Joe back. I agree. I agree. 6-7. That was one as well. Yeah, 6-7. All right, listen, Joe. We talked about what's going on with Intel. We talked about all of Plan A, Plan M, Plan ETF, and Plan Sit and Cash and Don't F Up. What's left to do is talk about how to save time, make money, and start winning with less risk. How could they do that?
Click on one of these videos.
One of those two videos? One over there, one basically right in front of our faces? That's a great idea, Joe. Have a fantastic day, everyone. We will definitely be talking soon.